Are you an income-seeking investor who is searching for an extra monthly cash flow? Dividend ETFs pay you a regular dividend, and these are the best for those investors who want a passive income, are a bit more risk-averse, and could be on the older side because they want a blend of income and a bit of growth appreciation. Dividend ETFs are a great addition to your portfolio, especially if you're always worried about what is going on in the market, like me. They're relatively less expensive, available through robo-advisors as well as brokerages, and they're also less risky than individual stocks. What's up guys, welcome back to Glory Investing Show. In this video, I'm going to talk about the top 5 ETFs in 2022 that will pay you dividends every single month, so you don't have to wait for a quarter to get your dividend income. If you're new on this channel, for those who don't know, a dividend ETF is mainly an exchange-traded fund that is intended to invest in a bag of dividend-paying stocks. Let me tell you that the fund manager will select a collection of stocks created on a dividend catalog which pays out dividends to investors, thus working as an income investing approach for individuals that buy the ETF. PGX is quite similar to PFF. PGX also focuses almost 80% of its holdings around preferred U.S. securities. You might also want to know that the fund has a high sector weighting in financials and utilities, but the PGX holds considerably fewer industrial holdings compared to others, such as PFF. However, the top holdings between the two do overlap fairly a bit with popular companies such as JP Morgan and the Bank of America. PGX has a current dividend yield of 4.87% and a net expense ratio of 0.51% year to date. Here, it is worth mentioning that it's seen a similar dip to PFF as it's down a bit more than 8%, and it is not good news if you're already holding PGX. But it's great news for those investors who are looking their way to get into PGX. It has been a consistently monthly income producer since January 2008. It also has 300 holdings and none or over 2% of the portfolio with a share price of $13.48. Let me tell you that if you are a new investor, this low-cost ETF might be great for you because it can help you in building an additional stream of income. One of my favorite stocks. This ETF focuses on 50 different stocks that offer above average dividend yields with lower price volatility. So in the case of market turbulence, this investment is going to be more stable than some of the others. All things wise, utilities make up around 18.63% of the overall ETF composition, and after that, consumer staples around 15.34% and technology at 13%. The fund is encompassed mostly large cap and mid cap value stocks. The dividend yield is almost 3.27%. So if you invest $100 for a single year, you can expect about $3.27 back in dividends. Now the interesting thing is that it pays out a dividend every month. The return of the fund itself since its inception has been about 10.62 annualized return, and in the last 3 years has been returning about 7.61%. Let me know in the comments below if you prefer ETFs that pay out monthly dividends. The net expense ratio is around 0.3%, which is not very cheap, but it is also not very expensive as well. So you can expect to pay about $30 in fees for every $10,000 that you have put in this ETF. This ETF also has a downside. It's been failing the S&P 500, particularly in the last 3 years. Now, this ETF is ideal for someone who has the patience to buy and hold because it is for a long term and is a little bit afraid of what market commotion might come. Low instability ETFs, as of right now, is not going to perform as good in the bull market. But if a down market ever occurs, then you might actually see this as a good hold overall. I would say that this ETF is actually good for someone who is risk averse and wants to have it for the long term. The next ETF on our list is DHS, which is considered a US large cap value fund. This means that they hold some of the biggest companies in the United States that emphasize dividend income. You might be familiar with some of the companies within this ETF are ExxonMobil Corp, Chevron, and Pfizer, with the price of oil skyrocketing. The fund has the highest year-to-date return on our list at just over 5%. DHS has been paying dividends since its inception in 2006 and in 2012. It changes its dividend distribution from quarterly to monthly to attract investors, and the good thing is that it is still consistent today. DHS has a current dividend yield of 3.65% and a net expense ratio of 0.38. You might also want to know that the share price of DHS is near an all-time high though, which is great if you're already holding this ETF. But not really good if you're searching to buy unless you're such a kind of person who likes to buy at the top DHS is worth keeping on your list if you want a monthly stream of income. The KBWD has been offered by Invesco since December 2010. Let me tell you that KBWD emphasizes the uppermost yielding financials in the market, which results in a comparatively high yield fund. The current price of KBWD in marketing is around $19.65. The share price of KBWD has come down a bit during the last 6 months as compared to the majority of equity indexes, which gives a buying opportunity to the investors. The fund normally invests at least 90% of its total assets in the securities of publicly listed financial companies with competitive dividend yields in the U.S. The net asset under management is around $467.33 million. KBWD has 40 holdings, and some of its popular holdings are Starwood Properties, Armor Residential REIT, Two Harbors Investment Corp., and Investment Orchid Island. KBWD has a high expense ratio of 2.59%. This means $259 per year in fees on a $10,000 investment. KBWD has a dividend rate of 7.3% for investors that are more than $1.56 or over $0.13 per month for each share. The fund's 7.3% dividend yield is fairly high on a total basis and much higher than that of all pertinent broad-based equity and financial industry catalogs. KBWD has a 1-year price return of more than 26% and has a 1-year total return of 35.71%. If you're still looking for a perfect app with a lot of available ETFs to buy, check out Momo app. And last ETF pick for this year is Global X SuperDividend U.S. ETF. DIV is quite similar to the S&P 500 Dividend Low Volatility ETF. It made its debut in 2013 and is now a smart beta exchange-traded fund that provides broad exposure to the style box, all-cap value category of the market. The only difference between SPHD and DIV is that DIV invests in low volatility and high dividend-paying stocks within the entire US stock market. Here, it is important to note that this dividend has been making monthly distributions for the right years. The fund holds 50 of the highest-paying companies in America. They seek stocks with low instability while still consistently paying out dividends. Let me tell you that the sector weightings of the funds are heavy in financials, utilities, and consumer staples, which are known to be safer investments. Generally, companies that people do business with a part of their daily lives are frequently very defensive when the market is wobbly. It invests at least 80% of its total assets in the securities of the underlying index. The underlying index tracks the performance of 50 equally weighted common stocks, including master limited partnerships and REITs. If you look at the numbers, DIV has a current dividend yield of 5.26% and a net expense ratio of 0.45. Also, while other funds are seeing losses year to date, DIV is basically trading sideways while there are higher dividend yielding ETFs out there. Currently, the price of DIV is $21.31 per share with a 52-week range of $19.15 to $21.40. So, let us know in the comments section below what are your favorite dividend ETFs. If you enjoyed this video, make sure to smash that like button and share it with your friends. And while you're here, click to watch one of these 2 videos appearing on your screen. I will see you there. Take care and stay tuned.